In today's video, I'm bringing you a 15 exponential moving average, EMA, scalping strategy. Yes, you heard that right. 15 exponential moving averages. The strategy can be used in any time frame, in any type of financial asset. In this case, we are going to use it in Bitcoin on the 1-hour chart. The first thing we will have to select will be the 15 exponential moving averages. But because the platform I use to analyze TradingView only allows me to put up to 3 indicators, let's look for this indicator that comes with 5 exponential moving averages. So putting 3 of these, we would already have 15. We will add the following periods to the first one: 6, 8, 10, 12, and 14. We will change the color of all the EMAs to pink, and we will leave the thickness to a minimum. We will also deactivate these triangles that the indicator brings. The next group of EMAs, we will put them with the following periods: 19, 24, 29, 34, and 39. We will change the color of all the EMAs to light blue, and we will leave the thickness to the minimum. We will also deactivate the triangles that the indicator brings. Finally, to the last group of EMAs, we will put the following periods: 44, 51, 58, 65, and 72. We will change the color of all the EMAs to green, and we will leave the thickness to the minimum. We will also disable the triangles. The strategy is really simple. We will carry out a buy operation when all the pink EMAs cross all the green EMAs from top to bottom, and also one of the light blue EMAs is below all the green EMAs. If this happens, we will carry out the buy operation. We will put our stop loss a little below the point where we bought, if possible below the last low, and our take profit in a risk-benefit ratio of 1.5 to 1. In the case of wanting to carry out a sell operation, we will carry it out when all the pink EMAs cross all the green EMAs from bottom to top, and also one of the light blue EMAs is above all the green EMAs. If this happens, we will carry out the sell operation. We will put our stop loss a little above the point where we made the operation, if possible above the last high, and our take profit in a risk-benefit ratio of 1.5 to 1. At first, this strategy seems somewhat contradictory, because we usually buy when one EMA crosses another from the bottom up, and we sell when one EMA crosses another from top to bottom. The thing is that this strategy uses trend exhaustion. That is, after all the EMAs have crossed into the green, there should be a correction in the price and go up or down a bit. Once this is clear, let's see some more examples. And ready, I hope this strategy has been useful to you. Do not forget that before trying it with real money, You need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.